These are the only assets that are severely undervalued. And the fact that gold, according to the Bank for International Settlements, which is a central banker's central bank, gold held at home is the only financial asset that runs no counterparty risk. Get it done, people. Time is running out.
You know, to me, so much of what we see in a system, Christian, that is based all on trust is the erosion of the pillars of trust in American life. Whether you talk about government, the lack of trust within the government itself, the partisan politics, the Paul Pelosi's of the world being the best investor on the planet, these kind of things go unchecked. Members of the Federal Reserve, or even the Supreme Court are doing things that regular citizens would face repercussions for. They just get removed or they step down.
Let's be clear on what a carry trade is. That's borrowing at a lower interest rate level and then taking that fiat money and putting it into a higher yielding investment. So the Japan carry trade, you might recall, was the big carry trade because they've been in a deflationary spiral with negative interest rates, and either non-existent or negative interest rates since the 90s. But as we saw when they started raising the rates, that carry trade exploded. Well, then the U.S. dollar was a carry trade. And in fact, the carry trade, the dollar carry trade, outshines all other assets on a risk-adjusted basis, which I think is really, really interesting. Don't you think? After all, you don't really think of the dollar as being a weak and a carry trade. But record U.S. government shutdown, now that carry trade is at risk of unwinding since the shutdown has ended. And that means that hedge funds and traders are rushing to exit that carry trade because of the volatility, right? This is the volatility in the currency, which could easily trigger a crisis. So the carry trade now is set to trounce the world's booming stock markets, right? Because it's so volatile, that has to be unwound, and that has an impact because if you're borrowing dollars cheaper and you're putting that money in stocks.
When investors borrow dollars to buy higher return assets, they effectively use leverage to chase growth. Once volatility rises, especially currency instability, those borrowed positions must be reversed quickly. That means selling stocks, bonds, or commodities purchased with cheap funding. This forced liquidation becomes a pressure wave across global exchanges. We now see rising stress in equities worldwide, not just in America. Market overvaluation, short-term speculation, and narrowing risk premiums leave investors exposed. U.S. equity risk premiums have dipped into negative territory, signaling that holding stocks may deliver losses even before inflation erodes the dollar's purchasing power. For many, this marks a dangerous turning point.
Well, you're using borrowed money to buy those stocks, aren't you? And if you have to unwind that trade, that means that you have to sell those stocks to get out of that carry trade. And that has an impact on the global stock markets. So you might have noticed the level of volatility and the problems in the global markets. It's not just here in the U.S., it's on a global basis. But what you must be clear about, especially since we're hearing so much and we've talked so much about the significant overvaluation in these markets, which are being led by traders. Well, the U.S. equity premiums are in negative territory. That's not something that typically happens, but what that actually means is that if you're holding money in the stock market, you are more likely to lose that money. As well as the inflation loss of the purchasing power of the dollar the value of the dollar. It's a double whammy. The markets go down and you lose value, purchasing power value. I don't know. What do you think? I think that sounds like a good deal to me. But here's what the markets, those pundits, those talking heads that, of course, they only want you to buy, U.S. stocks now offer investors no return whatsoever on a risk-adjusted basis. I think that's very interesting. Are you in the stock markets? Are you going to stay in the stock markets?
While equities wobble, precious metals have quietly outpaced nearly every major index. Spot gold and silver, despite frequent claims of manipulation, have delivered stronger risk-adjusted returns than the S&P 500, NASDAQ, Dow, and even Bitcoin across several recent periods. Central banks, especially in Asia and the Middle East, continue record-level gold accumulation, treating it as a geopolitical hedge. The Bank for International Settlements still classifies physical gold held domestically as the only asset free of counterparty risk. With inflation persistent and real yields volatile, metals have become a safe harbor for institutions navigating uncertainty and for individuals searching for long-term stability.
If you make that choice to remain in there, you better be properly diversified so that even Wall Street insiders are telling you how overvalued these markets are and how you are not going to get your money out of them. U.S. stocks now offer investors no return whatsoever. They actually offer you a negative return because you can only convert them into dollars that are rapidly losing purchasing power value. And take a look at this relative performance chart. There is spot gold and spot silver, manipulated as it may be, but absolutely trouncing all of those U.S. market indexes and globally too. The S&P 500, the NASDAQ, the Dow Jones Industrial Average, and even Bitcoin. These are the only assets that are severely undervalued. And the fact that gold, according to the Bank for International Settlements, which is a central banker's central bank, gold held at home is the only financial asset that runs no counterparty risk. Get it done, people. Time is running out.
You know, to me, so much of what we see in a system, Christian, that is based all on trust is the erosion of the pillars of trust in American life. Whether you talk about government, the lack of trust within the government itself, the partisan politics, the Paul Pelosi's of the world being the best investor on the planet. These kind of things go unchecked. Members of the Federal Reserve, or even the Supreme Court are doing things that regular citizens would face repercussions for. They just get removed or they step down.
The most significant threat to the financial system may not be inflation or debt, but the erosion of trust. Across government, media, finance, and law enforcement, scandals and political polarization have weakened public confidence. Markets are built on the belief that rules are fair, that institutions uphold standards, and that data reflects reality. But recent political turmoil, policy contradictions, financial misconduct, and inconsistent regulatory enforcement have strained that belief. From rate-setting controversies to insider trading investigations, every breach chips away at credibility. In a system powered by confidence rather than tangible backing, weakening trust becomes an economic risk all its own.
Medicine, media, law enforcement, you name it, it seems to be unraveling. And more so, the system's authority seems to be eroding from within, whether it be, again, our mismanagement of monetary and fiscal policy, fiscal irresponsibility, the way that we have gone around the world issuing sanctions. We're talking about 100% tariffs if they don't do this or if they do that. That's not a tariff. That's a sanction masquerading as a tariff. And excuse me, since the end of World War II, the United States were thought of as the good guys who rebuilt the world and they championed democracy. But it seems when you look at this country now, Christian, that the moral high ground is gone and it's undermined by hypocrisy, a rules-based order, while at the same time we break those rules ourselves and punish other nations for actions we take. For example, look at what we did with Russia. This isn't a statement on the Russia-Ukraine war, but we kicked them out of SWIFT. We took $5 billion basically of their U.S. treasuries. We, in essence, defaulted on them and gave them largely to the Ukraine in the form of weapons, while at the same time, 22 years ago, we invaded Iraq, destroyed their country in the pursuit of weapons of mass destruction, toppled their regime. And you know what? We didn't find them, but guess what? We're still there today, occupying with military bases. And the world looks at us as being hypocritical. And you look at the country, excuse me, the U.S. now has a record almost $19 trillion in debt. Household debt is up 60% over the last decade. You have delinquencies in auto delinquencies, highest in 15 years. Subprime auto delinquencies, highest in 31 years. Student loan debt, all-time highs of almost 15%. Credit card delinquencies, highest in almost 15 years at 7.1%. You have a country that is engulfed with debt, a country that is divided between red and blue and rich and poor and black and white and vaccine and no vaccine. And you know, it's a country that is divided. It is a country that has lost trust in its institutions. And the world has lost trust not only in our institutions and wonder what the hell's going on with the country.
The U.S. faces a staggering financial burden. Over $38 trillion in federal debt and nearly $200 trillion in unfunded liabilities. Household debt has surged, and delinquencies across autos, credit cards, and student loans have reached multi-year highs. During the recent government shutdown, hundreds of billions were added to the national debt in weeks. Meanwhile, sanctions and aggressive tariffs have pushed many countries to reduce their reliance on the dollar. From BRICS expansion to rising gold purchases, a slow rebalancing of global power is underway. Confidence in U.S. fiscal stewardship is fading, reshaping how nations prepare for the future.
But I think are making pivotal moves away from the dollar and the treasury, which have been horribly mismanaged and have been weaponized. And you look at the U.S. government in the 6 weeks that we were shut down added $600 billion to the debt. In seconds, that's somewhere in the neighborhood of 20,000 years ago in seconds. So, you're talking about a country that is perhaps lost its bearing and greatly diverged from what we once stood for. And I hate to say that, Christian, because I'm a patriot who thanks God every day he was born in this country. This country has given me more opportunity than I deserve. But I look around me and I see a world largely over the last several years, although it seems to be moving back, where meritocracy was sidestepped for lifestyle. And I outworked people. And that's what gave me the opportunity to be where I am. But in a world that we lived in for the last several years, that wasn't as important as your race, your color, your social beliefs. These are the things that greatly upset me over the last several years. And I think now what the pity of it is that much of what President Trump is trying to do and to bring back the culture that was whitewashed right out from under us with election interference or the perception of it, the two-tiered judicial system perception of it, the wokeness, the lack of meritocracy, the immigration issues, and the fiscal irresponsibility has to have some form of repercussions. And we're beginning to see that all the way around if you look closely. So, I hate to sound like someone who is negative about the state of affairs, but I'll tell you that there are a lot of things to be concerned about. And, there's a fine line between pessimism and realism. I still think that there are wonderful opportunities in this country, and hopefully we can get our act together. And I have views on that, on how we can. And I think the administration is hedging towards that.
The deepest cracks are forming in the financial system's core, the banking sector. Despite abundant liquidity, the Federal Reserve has injected tens of billions into the repo market in recent weeks. Banks now prefer parking cash at the Fed rather than lending overnight to peers. This isn't a liquidity problem, it's a solvency and collateral quality concern. When institutions doubt each other's balance sheets, the system enters a trust crisis. AI-driven job disruption, geopolitical fragmentation, and fiscal strain only intensify the uncertainty. Like the Shawshank crawl, the road ahead may be difficult, but those who prepare early stand the best chance of emerging on the other side.
But we've kind of dug ourselves into a hole. Look, let's just put it this way. We have 38 trillion of debt that we talk about, but we also have almost 200 trillion in unfunded liabilities, Medicare and the Medicaid and Social Security and the government military pensions that are off balance sheet. Now, we talked about how many seconds $600 billion is, and I'm not positive on that, but I can tell you the reason I said it's around 20,000 years ago is a trillion seconds ago was 31,688 years ago. And we add $1 trillion in debt every 100 days. And we're a country that doesn't make anything anymore. And a country that's massively in debt. And you have AI coming, which will kneecap entry-level jobs, 50%, they say, in the next 3 to 5 years. We have a long road ahead of us. And I have views on what I think this administration is doing. And there's nobility in it, by the way. They don't talk about it because I think they can't until it's implemented. But while there is reason for optimism, I'd liken the situation to the Shawshank Redemption. Do you ever see that movie?
I have. It's a great movie.
Andy Dufresne had to crawl through 2 miles of crap to get to the other side. And I think that's where we are as a country right now. There is something to look forward to on the other side, but what's it going to look like getting through it? And I think there is a time when debt matters as the world reserve currency, or fiscal irresponsibility matters as the world reserve currency, or integrity and trust really matters as the world reserve currency that is no longer pegged to anything but trust. So if I had to break it down, Christian, to one word, I think there's an erosion of trust. One last point, you're even seeing that in the banking system now, right? The Federal Reserve has injected somewhere in the neighborhood of $200 billion into the repo market in the last few weeks. That's crisis level intervention. And the repo market, where the banks trade overnight with one another, literally overnight, to balance their balance sheets or to make good on payments that they won't have liquidity for until the next day. There's twice the liquidity in the system as there was in 2019 when the repo market blew up. This isn't a crisis of liquidity. It's a crisis of trust. The repo market is, in essence, where a large bank will lend money to either another bank or a hedge fund overnight. The other entity posts collateral, either U.S. Treasuries or mortgage-backed securities, whether it be residential or commercial. We've seen a lot more of those in lieu of Treasuries. And these banks would rather keep their money parked at the Fed, earning the federal funds rate with safety, than lend it out even to their cohorts for 24 hours or less because they don't trust the collateral or the solvency of the counterparty. That's an indictment at the highest level of trust. So to me, this is all about trust, Christian, and hopefully we right our ways. Again, I have views on what they're doing, but to me, the biggest issue here is the erosion of trust from the main street all the way to the highest levels of government.